Hello and good afternoon to everyone. Welcome to today's edition of Business and Banking Dialogue, your one-stop destination for the best of best relevant topics and discussions in the world of finance and payments. I'm KK, your host and moderator for this show. Welcome everyone, all participants in EPS channel, Facebook, Twitter, and YouTube. With me today is Sushma Kaushik. She has appeared before in our earlier editions too. Sushma is a partner at Aavishkaar and brings with her over 18 years of diverse experience in the field of early stage investing, small business incubation, and consulting across many sectors. Sushma has worked to identify, manage, and exit large number of companies and has worked closely with several inclusive business entrepreneurs. Some of her achievements are there right in front of you. Speaks a lot about her journey so far in the world of investments. So ladies and gentlemen, a strong push from the government of India has given the non-banking population, was estimated to be about 550 million, easy access to financial products. Payment organizations have demonstrated the advantage of mobile-led solutions, and the traditional banking organizations are now reaching into rural India by launching innovative mobile-based solutions. Large technology companies are also using new ways to reaching out to the rural masses and educate them about the various financial products, thus ensuring that their hard-earned income is rightly invested. So you must have heard about the migrant issues, and the direct benefit transfer, DBT as it is called, is a classic case of reaching out to the remotest migrant and rural population riding the technology of fintechs. However, newer technologies also pose challenges to banks and regulators with cyber frauds, hacking, and governance of new technologies, which the regulator has to keep looking at whenever new technologies come into being. Today, we will discuss with Sushma her thoughts on fintechs for inclusive India. Good afternoon, Sushma, and welcome to Business and Banking Dialogue.
Good afternoon, KK. Good to be here again.
Thank you. Same here. Good to see you again. Sushma, why do we need fintechs firms for realizing the goal of inclusive India?
Okay, first let me start with telling, when we say inclusive India, what we mean. We are a country with close to 1.4 billion people, right? Do you know what the insurance penetration in a country like ours is? It's a dismal 3.7%. And it's one of the lowest when compared to even among the BRIC nations, we are among the lowest, right? Mm-hmm. When it comes to credit to GDP ratio, we are as low as around 11%. Where we have done well is in terms of our accounts. So, and what went right was clearly the Jan Dhan account initiative taken by the government, where till that initiative started, we were as low as 60% of the population only had accounts, right? I mean, a basic thing like opening a bank account was only accessible to 60% of our population. Jan Dhan has very successfully taken it to 80-85% now. And the DBTs that you were talking about, which were given out by the government in a crisis like that we're facing right now, was only successful because of the whole program that the government had initiated. So when you see the number of excluded people from financial services, and when I say financial services, I don't just restrict it to banking services, banking, payments, insurance, savings, all of those would come under the gamut. And we are severely, underserviced in multiple ways. Our financial savings as percentage of household is only about 40%, right? I mean, clearly we need more avenues to increase things like this. And one could probably be lack of access, lack of right products, like lack of affordable products. And this is exactly what fintech players are addressing today in a very aggressive manner, and there is a need for a country like ours that these players all participate in solving the large problem that we face.
Thank you. So you said insurance penetration is just about 3% to the population,
As a percentage of our GDP, yeah.
which is like massive gap out there, right? And yeah,
to just put it in perspective, what it actually means is, so India is one of the largest populations, as I mentioned, and is one of the big markets for insurance, right? But yes, the premiums, the per capita premium that we pay is as low as 3,300 rupees per person almost, and in more developed countries it is as high as 45,000. So you can imagine the gap that we are facing when it comes to even the premiums that we need in terms of coverage of insurance. So that's the gap we are talking about.
Yeah. Okay. So Sushma, I read the report from the World Bank, okay, and it said over 80% of Indians have now, it's a very recent report, have now access to banking accounts from the earlier days when almost 60% were not even having a bank account. So a high percentage of 80% to any other country would be like, oh, it's fantastic, But in the Indian context, it means over 190 million people over the age of 15 years still don't have a bank account. The question is it enough to say that India's financial inclusion growth is heading in the right direction? And are there effective ways to cover that last mile of financial services?
Right. So you mentioned the 80%, and it has definitely grown from 60%. And so where is the remaining 20%? See, I believe that 20% will come. What has been done is quite phenomenal in its own place, right? I mean, we've achieved this in a very short duration of time of achieving a 80% or 85% now number. But the bigger question and more relevant question to ask is: are people using these bank accounts? What is the activity rate of people using this? Are they even aware that they have a bank account? Do they even know what is the benefit of having a bank account? Those are the questions that need to be asked. Yes, there was a government push, and banks were forced to open bank accounts reluctantly in many cases, and so it was done. But now what? That is the larger question.
Yeah, that's true. Yeah, so I think if this unbanked population was left out from the mainstream of financial services, I think we would have had a huge, almost a civil problem on our hand if there is this complete divide in the population of haves and have-nots. And I think to some extent we may have bridged that gap. So that in itself is a great thing. However, like you said, bank accounts are opened, so they may be getting savings account and some maybe FD or something like that. But however, majority fintechs in India are generally associated either with domestic payments or lending. So what are the challenges that have retarded the fintech innovation for providing other digital financial instruments, like investment products or retirement product or insurance product? You said life insurance is a huge opportunity to eligible people in the the far tier 2, tier 3 and villages across India.
I beg to differ. I have a different view. I think the fintech ecosystem in India is thriving, and very well so. India is home to over 2,000 fintech startups alone. Leading the pack is fintechs in the payment space, as you rightly pointed out, because clearly there was a lot of disruption that needed to be done. There are close to 405 odd startups in the payment space. But leading the pack are, one is the obvious contender, people solving for lending issues or lending problems. And the other contender is in wealth advisory space. So wealth advisories or robo-advisors, as they are called, there are a significant number of players now, over 300 odd startups addressing this challenge, which is all addressed in how to improve access to saving products, investment products, and thereabouts, right? So, when it comes to insurtech, again, insurtech has been a term that's coined very recently, but the innovation that has been happening in that is quite phenomenal. So as I mentioned, insurance has always been a product for the rich in a country like ours, and not just the rich. It's restricted to the top 4 or 5 cities of our country. In a country like ours, where we have so many cities and where population lives all around in the other Bharat, as we call it, it's really sad to see that the insurance penetration is restricted only to the large metros. And this is where, it's a huge opportunity for tech players, insurtech players, to enter and disrupt it. And that's exactly what is happening. So you've seen insurance manufacturer like Digit, who's purely digital in both front end as well as in their back end, who is making waves in the insurtech space. There are also a lot of smaller startups addressing the gaps in the whole process chain of insurance, whether it's in claims, whether it's in distribution of insurance, whether it's in designing the right products. There's a lot happening on fintech. I don't agree that there's a lot of scope for more in fintech to happen. Of course, there's always scope for innovation, but we are quite vibrant. We are the 3rd largest fintech hub in the world. Of course, not counting China. I'm not counting China for now. They're a different animal altogether. But it's one of the most attractive places for fintech to work on. And we have such a large problem, right? So anything which is a success will solve a problem anywhere else in the world also.
Yeah. So this insurtech, as you call it, right? That seems to be pretty interesting. So how many such insurtechs are in India right now?
I'm sure there are more than about 200 odd insurtech players. I don't know the number, but I wouldn't be surprised if there are more than 200.
Okay. Are there any innovative products that they are coming out?
Absolutely. There are some very interesting insurtech players. So to begin with, as I mentioned, insurance, the challenges that insurance as a sector is facing is, one is in outreach, that is the distribution. The second is in the right products. And third is in pricing the right products. And fourth is in customer servicing. Right. So these are the main challenges that an insurance as a sector faces. And you're finding a lot of insurtech players addressing all of these small problems, whether it is in the distribution to the right segment at the right price at the right place. There are lots of innovation. I mean, even someone like a Policy Bazaar, who started off as a web aggregator, when they started, it was one of the most innovative businesses around. And look at where they are now. They're one of the most profitable fintech businesses in India today. And so that we'll start with that. Then there are obviously a lot of distributors, all tech first distributors, who are solving for the problem of reaching to the right customer, whether it is in tier 2, tier 3 cities and towns, whether it is in the rural areas. Now, the second problem that we face is in the right product, right? You can't go sell a person, a farmer in a village, a product that is very relevant to a city dweller, right? Even when it comes to small things like health insurance. The health insurance requirements of a rural customer is very different from that of an urban tier 1, tier 2 metro customer. So having those kind of bespoke products plays a big role. For example, small things like we have an extended warranty program for most of our white goods, right? And that's for people like you and me who can afford it. But if you ask a farmer who has just bought a phone, did you get an extended warranty? And he'll say, what is that, right?
Yeah.
Because there's no awareness created. People didn't even try to explain to him there is a need for something like this, or that he can buy something for a cheaper price, right? So now there are a lot of fintech players who are addressing the gaps in the product development itself. So there are lots of sachet insurance products that are being developed bespoke to specific segments of the population. So that's an interesting job. Second is the biggest problem insurance faces today is in claims management and customer grievance. Customers don't like insurance because it's always associated with something negative, right? And so they don't understand the need for an insurance product. And also, if they have ever taken insurance, they've always had a bad experience with that product. And so they stay away from it. But now if you ease the experience itself of customer using a product of insurance, then there is really no harm in using or providing a service like this. So there are players addressing this gap as well.
True. So we touched upon literacy. I think awareness is not there. If awareness is there, perhaps a lot more demand can be generated. How important, because we have had some subject matter experts talking about it, how important is financial literacy? And do we see, something like a lit startup or finlit startups who can come out there? You think there is a lot of scope out there?
When it comes to literacy awareness?
Yes.
So, when this whole, the cycle of certain products started developing, awareness was trying to be built as a standalone, enterprise. Yeah. Very soon, startup promoters realized that it's hard to monetize just a pure awareness platform. So now what you see, version 3.0, 4.0 of these kind of businesses are awareness is inbuilt into the platform or the channel that is servicing a product. For example, one of our portfolio companies is a company called Checkbook. Checkbook is a neobank that services a very niche specific segment of kirana shops and small business owners. Now, they are trying to provide or be the platform for all financial services products, insurance, savings, investments, and short-term credit, long-term credit, personal loans for only this segment of the population, right? So what have they done very smartly? They have very interesting awareness programs that are inbuilt into the service that they are providing. So obviously it helps that they have a brand manager, someone like Harsha Bogle, who speaks the language of the people, who relates to people, people relate to him. So they, when he talks, people listen to him, right? So he has something called a fitness program for financial fitness. And when he talks of, doing small savings, SIPs, people actually listen and they say, okay, so that's not too difficult. Maybe we can do it too. So those are the kind of awareness that are embedded into the programs that are otherwise done. It can't be a standalone solution.
Yeah. Okay. Thank you so much. That is, I think, very interesting to know that the literacy is also being embedded into these kind of new startups. So, any literacy of any sort in the rural and remote areas is only going to help in picking up demand. People, if they are aware of it, they will come forward towards it. So, ladies and gentlemen, very, very interesting discussion with Sushma on fintechs and the financial inclusion part of it. This is India, right? This is where the whole thrust of India is today, in the financial inclusion, in the rural economy, and delivery of financial services in the remote areas. And that's the topic that we are discussing with Sushma. I'm sure it is something close to your heart. There will be a lot of questions that you need to ask. So please put in your questions in the Q&A box, and I will ensure that these are put across back to Sushma and she can address them for you. You could also ask a question, a couple of questions directly to Sushma. by raising your hands and ask and saying that you want to ask a question. So that also is possible. So I look forward to your questions, please. Sushma, let's go ahead while we wait for some participation questions. So while digital and newer finance firms have largely benefited from the government's pro-startup policies and flexible regulatory conditions imposed by RBI, formal institutions possesses an established infrastructure and legacy that is not easily replaceable. Is that slowing down inclusive India?
Sorry, I didn't get. Is it?
Okay. Yeah. So let me rephrase this. There are these new digital firms or startups that have come, and so they are and these are promoted by good regulatory, flexible regulatory conditions posed by RBI. So on one hand, you have these new firms which can be tech savvy and move along pretty fast. Another hand, you have a whole organization, old legacy organizations like banks. Typically, maybe you can say the PSU banks, which are so old. Now, for them to adopt these kind of new changes is a problem because they have established infrastructure, such large infrastructure and legacy that is not easily replaceable. Is that slowing down inclusive India? There are two worlds.
I wouldn't say it's slowing down inclusivity. I will say, yes, there are new players who are entering, who are far more agile, probably smarter, probably far more, adept in coming out with new solutions for the problems that we face.
Right.
But it's not that, the traditional players are being left behind. Firstly, they are standing up and taking note of the situation. They are understanding what their weaknesses are, which is a good start. And they are figuring out how to overcome those challenges. It could be through partnerships, it could be through collaborations, or it could also be by rehauling your entire system, right?
Yeah.
So that is definitely happening. And I don't see that as a bottleneck. I see it positively again, that they are moving in the right direction.
Okay. Fair enough. Sounds good. Okay. Can you give, because of your experience for so many years, can you give us some examples of fintechs who have developed new revenue models by tailoring digital financial services to the various strata of the Indian society?
Right. So I'll give you some interesting examples. And the reason why I'll give you these examples is to just showcase how you don't have to come from financial services to solve for a financial service problem of the country or the region. So one example from our own portfolio is a company called Agrostar. So Agrostar is a service provider for farm implements and inputs to farmers at their doorstep. Very simple value proposition. They provide implements, they provide things like seeds, pesticides, and whatever a farmer requires at whatever stage of his crop. Very unrelated to financial services. But what has been very interesting is they have been able to overlay credit and insurance as offerings to the farmer at the right price, at the right time, and at the right place, right? This would not have been possible for a standalone, maybe an insurance player or a standalone financial services player to reach the same farmer, have the same intelligence or data to provide products. They wouldn't even know what product the farmer would need when. And these guys are sitting on just so much transaction data of the farmer. They interact with the farmer so far more frequently. Trust has already been built, and then to sell these products is just the logical next step, right? So non-financial services player who has been able to move into the financial services domain, right? So that's the beauty of something like this, that you don't have to come with just, big balance sheets or having understood insurance in the past, because nowadays data is solving for many of the challenges that we had faced before. Similarly, this other company that I mentioned, who is again a platform player, which is Checkbook, they are sitting on a lot of data of what small kirana shops are in terms of transactions, selling, buying, frequency of buying, and they have granularity of the SKUs that they are buying, and ticket size, what is their average ticket size of sales, how many sales, what are the turnarounds at a shop level, right? And that kind of rich data is enabling them to, again, sell very bespoke, unique products to the kirana shop guy, whether it is in terms of short-term credit, whether it is for cash flow management, whether it is maybe he wants to buy a two-wheeler, whether it's to buy a home. They know exactly when the guy needs what and whether he has the ability to repay a loan that he intends to take. So those kind of players are really changing the landscape for many sectors. So it's not like they've come from traditional backgrounds. It's not like they've come from the same sector also, but they're able to service the customers with these products. So that's what makes this very interesting.
Yeah. So both these models, the kind of number of people you require, the foot soldiers who would go and solicit customers or talk to customers, is that supposed to be a large base of employees or contract that you would keep?
So that's the beauty of digital transformation and digital platforms. And I think with COVID, this has only been re-emphasized, right? A lot of people are adopting the digital way going forward. Even when it came to awareness, you did mention about, we need to create awareness. Overnight, people realized the importance of having something like a health insurance product, right? And the demand for health insurance products went through the roof during this whole COVID fiasco, because people have realized that healthcare costs are increasing, that something bad can happen to you, and it's better to be prepared than to be sorry, right? And this has been one of the reasons why health insurance has really picked off. But what's more interesting is there have been very interesting products that came out during this pandemic, like sachet health insurance products. Something as low as $4.99 or $8.99 has been launched in the market. Again, solving for this exact problem that people want an insurance product, but they don't know how expensive it is, whether they will need it or not. So they're providing small ticket products to say that, okay, if you are hospitalized, you will get a hospital cover of up to 60,000 rupees, right? And this is only a 400 or a 500 rupee product. It's not like they're asking for a high premium. It's not like they're committing a very large cover, but it solves the purpose. So those are the kind of innovations that are happening in something like this.
Yeah. Okay. So good to know that, because having that, I thought having a large number of contracts or employees going as foot soldiers into the remotest places is a challenge by itself. So I'm glad that fintech and the technology has enabled us to not have that kind of things, but get things done even digitally. So it's good to learn that. So let me move on, Sushma. So financial inclusion of SME through alternative lending has been one of the key goals to improve GDP. So that's because the SME and MSMEs contribute a large portion of the GDP percentage. It's also a key focus area for restarting the economy post the COVID crisis. Can you share some insights on innovation spurred by fintechs in ensuring the availability of micro ticket loans to the SMEs or the MSMEs, businesses and farmers? You did mention two examples, but specifically at the micro tickets and to the MSMEs, do you have any case studies you could talk to us about?
So the biggest challenge that any lender faces is in the pricing of the risk, or even evaluation of a risk. More so in a scenario like now, when a lot of SMEs, MSMEs have lost livelihoods, or their businesses have been negatively impacted in whichever way. So they're taking a kind of a risk, and pricing it becomes challenging. However, this is again where digitization is playing a very important role. And as you rightly said, it's only providing credit at the time in need will spur the economy, especially when you provide short-term credits to MSMEs and SMEs. And we are seeing that a lot in a very positive way, that the whole GST regime that started has again thrown a lot of information available for people to take surrogate decisions in lending, right? And also people are using a lot of past track record to judge the intent to pay and the ability to pay kind of matrices that all the lenders have, what they are trying to assess, basis which lots of new age lenders are giving out small ticket loans with very little paperwork, very little documentation, with the intention to spur the economy. The demand for something like this is huge. In fact, recently we were talking to a couple of our lending companies in our portfolio, and this was the feedback we were getting, that everyone wants credit to restart business, and that's what's going to take things forward. So I'm really, however, the lenders are a little apprehensive, and we need a lot more new age forward-thinking lenders to start the process in a positive manner. So maybe they should relook at the kind of products they have. They need not give long-term credit. It need not be a 5-year or a 10-year kind of a credit product. It has to be something shorter. It has to be something that will immediately kickstart the business for small businesses. And so that will also require a lot of understanding of these kind of businesses to enable something like this.
Yeah, I think the MSME faces a very big crisis post the COVID. So I think the credit offtake has to happen there, or giving them credit to just survive is very important. And I think we still have a long way to go. I think in this digitization, that people still have to go to the banks, to the financial institutions, sign documents, take the risk of going out. And it's still happening, and not only in. I'm not talking of small towns, even big cities, urban. Like if you want to liquidate your own FD, you have to go to the bank. I mean, that's pretty strange. So I think we have a long way to go there. So ladies and gentlemen, it's past the half an hour since we started discussing with Sushma. And I look forward to your questions. Please send them quickly before it's too late to take up these questions. Let's look at China. And I think we also have a chart to display just for comparison purpose. Like you said, it's a different animal. Yeah, it is. It's looked at as a bigger animal than what it was before. But anyway, in 2019, the Indian fintechs surpassed Chinese fintechs in raising funds for the first time. So according to the CB Insights, in the January-March quarter, the first quarter of the calendar year of 2019, fintechs from India raised 286 million, whereas Chinese raised $192 million only. Why are investors interested in Indian fintechs? And I might as well add to this the recent investments that have come big time to one of the telecom companies. It's the massive investments that have come into billions of dollars. So what's the interest for investors in the Indian fintech companies?
Sure. So I'll just give a few more updates on the FDI or foreign investments and investments in general that have happened fintech in India. So there's been a latest report that came. Last year alone, 316 fintech companies got funded of a total of about $5.4 billion. So that is the kind of quantum of funds that Indian fintechs have been raising. Of course, leading the pack have been big names like Paytm, Navi Technologies, Digit, the insurance company, Policy Bazaar, the big guys. But nevertheless, it's a large quantum of funds that have been raised by fintech. So it's I think a fantastic story to sell. So the question is, what is driving the India fintech story? Again, some of the highlight numbers are the size of our population. I mean, we are one of the largest populations we are trying to address. But what's more important is our tele density is over 90%. And it's doubling every year in terms of the rural tele density. Over 500 million people in our country are using internet today, and that's also increasing. The rural-urban divide is reducing when it comes to internet penetration. They're almost 50-50. So their internet has become an equalizer of sorts. Smartphone penetration has also increased. So in fact, in one of the recent discussions, someone was discussing of, we should start creating fintech products for feature phones. And the question was, why would we do that when the smartphone penetration is increasing? It has already crossed the 500 million mark in India, and it is only increasing from here. So that means feature phones are going to be redundant sometime in the future. So when you're building solutions for the future, you can't think of the past and say, okay, but there is a small portion that is still using feature phones, let's do that. So smartphone penetration is increasing. The India stack architecture has been created with a lot of vision and has very beautifully been put in place. So things like identification, authentication, going paperless, cashless, all this has been possible mainly because of the whole India stack architecture that has been put in place. And all of this is what is driving financial inclusion in a country like ours. And that's where fintechs play a big role. And that's why it's such an exciting space for investors to invest.
Any thoughts on the investments that have come to the big telecom? And, it's like all over. It's the retails are investing, the big fintech companies are investing companies are investing. And what's the secret out there?
No, I'm waiting. I can't wait to see what new things will come out of this. They have almost created a FOMO of sorts. Everyone wants. It's either you've invested there or you're not worthy of being an investor. It's pretty much like that now, right? And the kind of things they are capable of doing, sky's the limit, and it'll all boil down to execution. And so that's what needs to be seen of whether they will put all this money to good use.
Oh, yes, of course. Yeah, that's very important. Rather than just growing the capital. So here I have a question for you. It's come from a very experienced banker, Mr. Prabhu. The success of any insurance player is the efficiency of the claims processing ratio, right? So that's that how much of claims have you been able to process rather than getting insurance premium, which can only build over time from an empirical evidence of viewpoint. So insurtech players, if they are principal and not agents, have to be capitalized significantly over a sustained period of time to ensure this fulfillment of assurance. Your thoughts, Sushma? Should I read out?
No, I get the question. So yes, when we look at insurance players, there are the manufacturers. Those are the ones who are actually underwriting the risk of the insurance product itself. And there are everybody else. Everybody else falls under the category of distributors or the brokers or the agents, as we call them, or in providing the services, the process services for the whole insurance system, whether it's in claims management, the TPA management, partner management, all of those, right? And very clearly, yes, the manufacturer needs to have very deep pockets, needs to have significant significantly long runways to address this kind of a product that they are in. And historically, if you look at it, insurance players have been around for many, many, many years. And once they turn profitable, they are always profitable after that, because it's a fantastic business to be in. And yes, the trick is in getting the pricing right. To manage the claims. And that's therein lies the challenge, managing the claims. But now the kind of insurtech innovations that are happening, insurance players or the new age insurance players are sitting up to realize that, yes, so we are similar to banking, right? They are the risk takers. They have everything on their balance sheet, but they don't need to incur all the costs on their books themselves. So what they're doing is they're going in the lean manner of reducing OPEX through multiple partnerships. So they don't have a very wide, feet on street network. So direct sales used to be a huge thing for insurance players. They used to open branches. They had a huge staff on their books. Now it's not required. Now everything is through very efficient partnerships. And that's what is driving growth as well. People have become far more efficient. The reach has become better. And therein is the distinction between a manufacturer and a non-manufacturer. I hope this answers your question.
I hope so. So one of the thoughts I had while you were giving this beautiful answer is that if claim processing is what is the ratio is what it is, why not, insurance? And this is a problem because people are still wary, although they pay the premium in time, when the claim comes, there's all sorts of issues that come up, and they don't get their claim settled. Though these days, because of competition, it's much better. Like you have for stock trading, when a claim comes, why don't you pay up the premium, put it into the bank account of the customer, and say, here is your claim, but you can only use this much of it, and the balance until we process it, you won't get it. Some such thing, which may be really attractive to the customers.
No, you absolutely hit the nail on the head. Claims processing is what keeps customers away from availing insurance, right? Because that's one of the most painful process of any insurance recipient, that when they actually need the money, they have to go through a lot of hoops to clear that payment, which rightfully belongs to them. And I'm happy to share that there have been a lot of players who are exactly doing what you're saying, that the minute a claim comes, no questions asked, it is processed.
Yes.
Right? And then, they go into the decision of whether it's been the right a claim or a wrong claim. And they're also trying to create a system like how in financial services we have a credit score. A similar kind of a scoring is being done of customers, because Indian customers are also known to be very fraudulent. So the frauds in insurance are also very high, unfortunately. And so that is a way of rectifying it by giving a certain, score to a customer, so that next time when they avail a insurance product, the premium will be a reflection of the score they have. So if they have malintention, or if they have conducted a fraud and have got a claim, the next time it will show up in their premium. And not only that, within insurance, unfortunately, they didn't have a single database where insurance companies were sharing amongst each other. And so customers had the privilege of hopping from one insurer to another. But now there is supposedly some work being done on a central repository where everyone, similar again, like a credit bureau, insurance bureau would be there, where everyone shares data to know exactly the propensity of fraud by a customer and to price that customer right.
Yes, I think you also hit the nail on its head. I think a good rating agency can help in ensuring that when a claim comes, do I pay full or do I take a percentage of it? I think that may kind of change the entire game out there from a claim processing ratio, and it will be more attractive for the. So So let's move ahead. Let's talk about the SMB lending supply chain. So which subdomains offer the most interesting prospects in the near to medium term, in SMB lending, supply chain finance payments? Which are the investments themes in these subdomains?
So when it comes to SMBs or lending to small businesses, I think the need or the call of the hour is to restart business. And when we are talking of restart, I really doubt whether people will be investing heavily in CapEx. They will only want to restart whatever existing machinery, plant, services they have. And so that doesn't entail a very large ticket loans or doesn't entail very long duration loans. It has to be innovative ways of figuring out what new products one can provide to them. And so those are the kind of, and hence if there are lenders who are able to do it smartly, digitally, with as least paperwork and effort possible, that would be an ideal solution in the medium to near term. And then of course things will start reaching equilibrium state in a year or two.
Okay, so great. I have a query which a person wants to ask you directly. Another experienced banker, Harish Prabhu. Harish, could you please unmute and ask a question?
Yeah, hi Sushma.
Hi, Harish.
I started my life, during student days as an LIC agent for 6 years and sold a lot of policies. And obviously, the rationale being that, I had some time on hand. So, and it was good money to be made and to meet people. So so in insurance, the agent is a very, very key fulcrum of the entire, sale process. And hopefully, if you, write the entire sort of life of the policy, he will help you in your claims processing also. But this huge structure of agent, right? And also because you end up giving, 25% of the first year commission, first year premium as commission to the agent, has resulted in the insurance product being not necessarily what you call a very cost efficient product due to you have to pay the agents. So now has InsurTech developed to an extent whereby the need for an agent is completely obviated, partially obviated, or will it be ever obviated at all? Given that, that the claims processing, the customer would want some human interface to ensure that, because mind you, insurance as a product is not a savings product, it's a mortality product. You're selling something, in the event of a death or whatever. Thanks.
Sure. So Harish, I'll kind of just differentiate between the two main insurance products. There's life and there's non-life. And for what you're describing, yes, for life insurance, what you're saying is absolutely right. There is a certain amount of, trust that needs to come in, and it's a high engagement product. Right, because it's at the end, it's a mortality product. However, where we are seeing maximum innovation are all in the non-life space, which again was one of the most underpenetrated areas because of lack of products. So when we talk of non-life, it's largely general insurance, crop insurance, motor insurance, health insurance, and other such products. That's where we are seeing maximum, innovation. Where you don't require the kind of feet on street or agent push that you were talking about, which was required in life insurance.
Okay. Thank you. Thanks.
Thank you, Sushma. So, Sushma, you talked about, there was a question from a YouTuber. You talked about insurance frauds, which do happen. And so there is not much of insurance frauds that have really come into the media. Would you know any such? He's asking if you can sense. Like bank, we know so many banks, right? But insurance?
Yeah, which is unfortunate, and it came to light only when I started talking to a few people, especially on the insurance manufacturing side of, why don't you go all out? Why don't you give out new products? Why don't you price it a little lower? And that's when, the kind of stories started coming out. The kind of insurance frauds in crop insurance are bizarre, and mainly because, again, very good intentions of the government, no questions asked. There are group insurance provided for farmers on crops and stuff like that. And invariably farmers go and ask for claims and they get their claims, again, no questions asked. And in most cases, those farmers, probably don't even have farmland, or, have not grown anything on that farm for which they're claiming a crop insurance. Those are the kind of frauds that people were seeing. In health insurance, I don't even want to begin the kind of frauds that are capable of happening within health insurance. There's a lot of collusion between various players there. And hence I completely understand where, manufacturers come from when they are a little conservative, to put it mildly, in terms of the processes that they have to follow.
Okay. So we've gone through a whole lot of discussion on the inclusive, how important fintechs are. So according to you, what suggestions can you give us for fueling the fintech revolution that will push the agenda of inclusive India? Can you name some of them, please?
Sure. So I'll attempt at this, because this is something big. But I must say a couple of things that are going well is large country, big problem. Everything is a big problem. Everything is underserviced. Everything is underpenetrated, right? So that's a fantastic place to start. The second good thing going for us is we have all the tailwinds in our favor in terms of digital penetration, internet penetration, smartphone penetrations, all going for a future where things are going to be positive. We also have a demographic push. So about 70% of our population will largely comprise of millennials and Gen X guys by 2030. So they are the ones who have grown up around technology, and so things will come very intuitively to them, unlike the previous generations. So they will be the ones who will drive for digital change. And third most important thing going for us is the infrastructure that I spoke about, the India Stack infrastructure, and all the different layers that are being put in place. All of this will converge to something big. In addition to the technology evolution in terms of telecom that's happening, if there's a 5G that will come soon, it'll only speed in or hasten everything for us. So what are the 2-3 things that we need is, what I would like to see is entrepreneurs coming to solve big problems. Unfortunately, many entrepreneurs we meet who are solving fintech problems are very fearful and are talking very subscale solutions. And so this becomes a big challenge. One needs to think big. One needs to think of a large problem statement and try to solve for that, rather than solve for small incremental problem statements. Incremental problem statements, anyone sitting in a tech team in a large conglomerate can also probably figure out, maybe a little later, slower, whatever. But if you are trying to set out something on your own, try to solve for a large problem. And that's what makes it very exciting and interesting. And that is when India can, look at China, look at the startups in China, right? They all are over $1 billion. Everyone you talk to is a unicorn. Why do we struggle in India? Why don't we find those many unicorns? My belief is probably we are a little fearful. Our entrepreneurs don't think large enough, and maybe if you have bigger plans, you will also achieve what China has done.
Okay, thank you. Another question I have for you is from Sandeep. He asked a question. You have experience with a lot of startups, insurtech, and other companies. What are the leading underlying technologies that these people are coming in? What are the aggressive technologies that you see are coming forth?
So aggressive technologies, I will not talk of aggression in technology. I'll only talk of how smart technologies are coming. Most of the technologies that are coming are all, especially in insurtech, are all focused on improving the user experiences, which, as we just discussed in insurance, is something that is never ever discussed or addressed in a very long time. So even small features like how insurance is sold to a customer, at what touch point it is sold, and what my journey is going to be once an insurance product is sold, all of these focuses on me as a customer, which is where a lot of innovation is being done on today. And at the back end, obviously, there's a lot of work that goes into making that experience great, but that's where the focus is.
Okay, so it's more of user experience, and so anything on the blockchain, artificial intelligence, robotics? Do you see anything like that?
A lot in artificial intelligence. Pricing is a big area in insurance, also in credit as well. Wherever you need to price risk, artificial intelligence is playing a big role. But for AI to be effective, you need large chunks of data. And in credit, as I mentioned, we do have the advantage of bureau scores and other surrogate data. Insurance, unfortunately, we don't have that kind of rich data yet, but very soon we should be getting there. And so we will start seeing AI play a big role, but we are already seeing that in the rest of the world, where they are more data rich in that segment. And AI for pricing of products, for designing of products, for me as a customer, if they have to design a certain health product or even a motor product, they are far more intelligent there than we are seeing that in India yet.
Okay. Recently, I think day before yesterday, the Prime Minister addressed investors in the US, and he talked about 100% FDI in insurance. Is that going to be a big trendsetter?
I hope so, because there's a lot of room for work
Yes.
on the insurance regulation side itself. Currently, it's extremely restrictive. There are a lot of capital restrictions, and which doesn't give too much room for innovation.
Okay. Yeah, I think, like you said, there's a big scope out there. With just 3% insurance to the GDP, it's like a massive gap out there. I have a question for you from Tyag. Tyag, can you please unmute and ask a question?
Yeah, my question is simple. However, it could be naive also, because I still yet to understand the whole gamut of fintechs in its totality. The question is, are fintechs regulated with respective regulated entities, and do they need to have licenses? Question one. And question two, simple, is fintech aggregators. Are there fintech aggregators that serve the financial inclusive sector? That's it.
Sure. So Tyag, I mean, if I got your answer right, you're asking, are fintechs, regulated? Yep. So firstly, I would like to clarify that fintech is not one monolith, or they're not one type, right? There are different types of fintechs. So there are NBFC fintechs who are in the lending space. There are chit fund fintechs who are into chit funds. There are insurance fintechs who could be either the manufacturer or on the distributor, agency, broking, TPAs. And each of these forms of fintech are regulated by one regulator or the other. It could be RBI, it could be IRDA, it could be SEBI. So there are multiple regulators. I think India as a financial services ecosystem is quite well covered from a regulatory perspective. And most of these fintechs come under some regulator or the other.
All right, thanks.
Thank you, Sushma. Thank you, Sushma. I think we have come to the end of our hour of session. Thank you very much for giving those great explanations that you are good at, and I think people, as participants, generally like the way you put it across. I have to wind up my summary to ladies and gentlemen is that the fintech firms are definitely breaking new ground, so they are here to stay. And the formal finance sector, through the innovative and dynamic use of technology, is in the lending process, and they will definitely form a core important to ensure that the entire Indian financial inclusion is up and running. However, there are challenges. policies and governance will need to match the speed of innovation in the sector, particularly to ensure secure and transparent growth. Normally, customers' confidence and trust in traditional banking system will make customers less likely to adopt new technologies, but new technologies will not be successful until customers are satisfied with the privacy and security aspects. So with these thoughts, I would like to wind up today's session. Sushma, thank you so much for coming, spending 1 hour session with us and giving us a whole lot of information on fintechs. We had a lot to talk about. Thank you once again. Before I finally leave the show, may I tell the participants tomorrow we have a special promo. We have a special person coming. Guest is Shivaji Satam of the famous CID serial. So he is going to talk to us in our Saturday show called the Heart Talk show. Thank you, Sushma, once again. Good to have you here once again.
Thank you.
Thank you. Bye-bye.